The best understanding we have is that they're going to finalize the guidelines, that means in the fourth quarter, and that it's going to be mandatory for fiscal years after December 15th, 2024. That means everybody that holds these crypto assets and Bitcoin in specific will be required to for fiscal years after December 15th, 2024. But it's optional to assume this accounting treatment before that time. So that means, practically speaking, the early adopters and sophisticated Bitcoin companies will probably start to adopt it in 2024,
So,
before the end of the year, but sometime during the year, like in the first quarter of 2024 is the earliest you might see it. So I think some people have held off on that conversation. I actually think that the availability or approval of a spot Bitcoin ETF will be a big factor in putting this back in the conversation. And then the FASB accounting conversion to fair value is another big catalyst forward. Those are the two really big catalysts. I think that the spot Bitcoin ETF is a monstrous offering capability that will have an impact first. That'll have an early impact because to the entire conventional Wall Street banking system. What it means is people with trillions of dollars of assets in 10 minutes can buy $10 million of Bitcoin, and they can do it no money down. So I could literally buy a $10 million house in 60 seconds with no cash. I think their view is it's a scary new exotic thing, and so we'll give it the most conservative accounting treatment possible, like the one that's least likely to overvalue it, you see.
Bitcoin shows little action, signaling a quiet weekend ahead. Expect limited price movement in the coming week. Growing bullish pressure from US-based whale investors could spark a Bitcoin price rally. The Coinbase Premium Index indicates US institutional investors are accumulating Bitcoin, potentially boosting retail confidence. With the Federal Reserve's interest rate decision on September 19th, US institutional firms are amassing Bitcoin. Will this lead to a price surge? The Coinbase Premium Index shows positive values for the first time this month, hinting at a potential price rally. Similar past instances have led to significant price increases. Bitcoin spot trading volume has nearly doubled since September 2nd, indicating increased liquidity and investor interest. Historically, such spikes precede Bitcoin price rallies. US-based whale activity and on-chain data suggest a Bitcoin price rally to $28,000 is plausible. Rumors swirl that BlackRock's spot Bitcoin ETF has been approved. If true, it could trigger a significant price surge, possibly reaching $40,000. Let's continue our discussion with Michael Saylor.
You know, the accounting treatment for Bitcoin as of 4 years ago was indefinite intangible accounting. And that's the kind of accounting you would assign to assets that you didn't want people to buy, if I just boil it down, because it's the most conservative accounting you can imagine. Basically, you you buy the asset and then you mark it down to the lowest price it's ever traded at in the history of the ownership of the asset. So if you bought Bitcoin and held it for 4 years, and at one point it had traded down 50%, then you're carrying it, at half of the amount you bought it for. And so you could buy $1 billion of Bitcoin, it could trade down 75%, and then it could trade back to par, and then it could increase by a factor of 10. So you have $10 billion. And your balance sheet would show you as having $250 million, even though you had $10 billion. So it would look like you had, 97.5% less than you have. And so as you can imagine, that's like a one-way ratchet function. So if you're a CFO in a company like Facebook or Apple or Google, or any company where it was well received, where the stock was healthy, you would look at Bitcoin and say it's too volatile. And the volatility, you're afraid of it. It's not. I could guarantee you it's going to go up by a factor of 100. You still wouldn't buy it, because if it goes down by a factor of 3 before it goes up by a factor of 100,
It would affect
instead
your
of
financials.
showing $100 billion, you would be showing 300 million, and you would be way off. And so that's a problem. The other problem with the old accounting was there's no distinction between an investment gain and an investment loss. I have a business that makes $1 billion a year, and I buy $2 billion of Bitcoin, and it trades down 50%. And so I have what looks like an operating loss of $1 billion against the $1 billion in operating profit. So it looks like I made nothing. And then when the Bitcoin trades back up again, you never get it back. So the challenge for investors is you don't know how much money the company's got based on the GAAP accounting, but you also wouldn't really understand whether the core business was healthy or not healthy, because the volatility of the asset or the volatility of the accounting treatment would obscure the performance of the other business. And then the third problem is you could have $1 billion of Bitcoin a year ago, and it would look like you had 300 million. And this year you could have 10 billion, and it would look like you have 300 million. So in fact, you've actually generated $9 billion of capital return in the year, and it would look like you returned zero. And another company could actually have $1 billion, and it would look like they have 300 million. So it looks like your company has the same amount of Bitcoin as the other company, even though you have 10 times more than they have. So it makes it difficult to compare companies to each other, and it makes it difficult to compare periods to each other, and it makes it difficult to distinguish between an investment gain and an operating profit. So as you can imagine, you have to be pretty hardcore, or Bitcoin has to be your primary strategy, right? Like it has to be very, very important, so that your investors will do the extra work to, instead of actually looking at something and in 30 seconds understanding exactly what happens. And if you have a simple business, in 5 seconds, I can say, oh yeah, they generated $300 million this quarter, or 30 cents a share. And it's like 5 seconds and you're done. So, under normal accounting, you would do that. But if you have this complicated, indefinite, intangible accounting, that 5-second analysis would become a 1 hour review or half-hour review. And so most people don't have the attention span. And so this change to the accounting provides transparency. So it's a big step forward for corporations.
Don't forget to join us as we explore the unfolding events. A United States federal court judge has ordered the collapsed Bitcoin investment platform, Mirror Trading International, to pay over $1.7 billion in restitution. Commodity Futures Trading Commission Director of Enforcement Ian McGinley said the CFTC will not hesitate to go after fraudsters who target U.S. citizens. The commission again warned that court rulings are not a guarantee that victims will recover all their funds. The Federal Bureau of Investigation, FBI, says it has confirmed that North Korea's Lazarus Group was behind the crypto theft of about $41 million from online crypto casino and sports betting platform Stake.com. The FBI has provided a number of Bitcoin, Ethereum, Binance Smart Chain, BSC, and Polygon addresses that receive stolen funds from Stake.com. A commissioner with the Commodity Futures Trading Commission, CFTC, has proposed the first-ever pilot program in the U.S. to support the development of compliant digital asset markets and tokenization. The regulator emphasized, "Our principles-based framework is built for innovation in technology, new products, and market structure." If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.